Hello everybody and welcome to Greenstar Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, time for a quick update on Bitcoin. Today's video is going to be a little different. We're just looking at the long term here and I'm going to lay out my long term thesis as best as I can. Haven't done this since 2021. You'll be glad to know that if you did see that video, nothing's changed. This is just an update. Everything else in the long term is the exact same. But there's going to be more and more interest in this market going forward, I feel, and having some kind of video out there which explains what I think is going on the longer term is going to be useful. So if you're new to the channel, this is an opportunity to get an update. Now, I know I looked at Bitcoin and Ethereum recently. I'm only getting the occasional video out to YouTube at the moment. That is not going to change, unfortunately, for at least a year or so. Till my little boy goes off to nursery and then off to reception, I get a bit of extra time during the week. I can get more videos done. But I'm a devoted stay-at-home dad at the moment. My priorities have shifted. That's my priority. I'll give you what I can when I can give you it. For my patrons, I'm still doing my weekly live streams and taking requests to look at charts that people request. If that interests you, feel free to join. If you want to learn Elliott Wave, feel free to join. But just know that I'm working at a decreased rate. So it's only fair to let you know that. But let's get on with the video. I'm going to be using a lot of Elliott Wave terminology, so do your best to keep up. If you're familiar with Elliott Wave, that's great. If you're not, you could go off and learn it. I will try and explain it where I think it's necessary, but I don't want to waste too much time doing that. I just want to bring you up to speed. So let's turn off the primary count for a minute. First thing I want to look at, corrective lengths. Okay, corrections and corrective form. So let's bring up these three. That's a bit messy actually. Let's take that one off and let's just focus on the scale of the corrections and the type. In Elliott Wave, we have sharp corrections and we have sideways corrections. Sideways corrections being sideways combinations or the far more common flat structure, which is a 335 subwave count with a new price extreme featured within the B wave, or a 90% retracement with the C going to new lows or stopping early in what we call a running flat, which is a much rarer structure. Or we have the super simple 535 sharp zigzag. This could be 535, it could be 333 as a double zigzag or a triple zigzag. The one thing which is featured within it is that there will be no new price extreme in the direction of the prior trend within that correction. It will simply be a free wave move lower. What do I mean by new price extreme? Well, a new price extreme would be we come down in the beginning of a correction, we then go to a new high, that's the new price extreme, in the B wave of that correction with sympathy to the prior trend moving in the same direction, and then we come down lower in the C wave. This would be a flat pattern. Why is this important? In Elliott Wave there's something called alternation. Alternation is a very common occurrence. If you have a sharp structure within a wave 1, it's extremely within a wave 2, sorry, it's very likely that you will have a sideways flat structure within a wave 4 which features a new price extreme. At no point in either of any of these moves higher in these major free bear markets of 86% drawdown, 84 and 77, each one being smaller than the last, have we featured a sideways correction. Because there's been no sideways correction, there's no alternation with prior structure. Because there's no alternation with prior structure, we cannot be at the same wave degree. Also, we overlapped, okay, in this wave degree. So if you were to count this as 1 and 2 and this whole thing as a sideways structure, it overlapped the wave 1, which is a rule that can't be broken in Elliott Wave. So I consider this far more likely to be a series of sharp corrections, and sharp corrections are far more common in wave 2 than they are in a wave 4, and since there's no alternation and each one's getting smaller than the prior, I believe this to be what we call a wave 3 extension. Now let's bring that up in a super simple count. So, wave 2 at supercycle degree began on around Monday, the 5th of January 2015. All price action since that date has been subsequently a supercycle wave 3. That's what we're in. And that is going off to big time highs. Now, after that, we began a cycle wave 3, with the completion of the bear market of December 2018, and we have now begun a primary wave 3 with the completion of the bear market November 22. We are within the primary 3, of a cycle 3, of a super cycle 3. The capital and the overall liquidity of this market exponentially increasing over the next few decades. It could be less than that, it could be more than that, but it's going to take a long time, because another feature of this alternation is if we've had 1 2 1 2 1 2, we have 3 4 3 4 3 4, and if all of these were sharps, it's highly likely that all of the wave 4s will be sideways. Sideways structures take more time to resolve. What they don't give up in price, they give up in time. So we will have shallower retracements, probably 30, 40, 50, maybe 60% retracements as opposed to 70, 80, 90% retracements, right? We'll have the shallower retracements which are more time consuming. Now, if it takes a year or so to complete one of these sharps, it may take 2 years to complete a flat. Excuse me, still got a bit of a cough that I'm getting over at the moment. So, as I was saying, it may take longer to complete a flat, maybe 18 months, maybe 2 years, whatever. But the other point is, each of the wave 3s within this wave 3 of the primary, wave 3 of the cycle, wave 3 of the super cycle, will be the strongest of the waves, probably the most time consuming. Okay, so not only are the corrective structures going to be longer and more drawn out and shallower, the impulse waves leading into them are going to be longer in time and scale as well. So the whole process is going to get stretched out like an accordion, okay, over the next few years. So it's all gravy. Okay, now that we've had an idea of where we've been and we've established an idea of where we think we're going in the future, let's look at a few other classical technical indicators before we come into the more detailed counts and pick through the shorter term. But we're only going to do that for a little while. So turn off the corrections here and the simple count. And let's bring up our indicators. Now, first thing I want to look at is the RSI. Okay, so each time we achieve a market bottom, we reach extreme oversold conditions in the RSI. So here's the 2015 market bottom. Here's the 18 market bottom, and here's the 22 market bottom. Each of these conditions has resulted in a subsequent bull market. This has been the same here, here, and there's no reason to believe it would be different here. Okay, each RSI reading has been more extreme as we get stretched out like an accordion, as I mentioned earlier, as we enter this 3 of the 3 of the 3. I imagine the extreme readings in overbought conditions, I imagine the overbought conditions, I should say, will be the exact same as we go into the 3 of the 3 of the 3, so on and so forth. So it looks like we've bottomed here. Okay, I pointed that out many months ago. If we look at the MACD, we can see how on the weekly time frame we have crossed the average through the signal above the zero bound in positive territory with a big green bar on the histogram appearing. That looks bullish. Right, and let's look at it on a monthly time frame. We can see how after the big bear markets, each of these bear markets, we have this huge red, dark red histogram, then it lightens off. Big dark red histogram, then it lightens off. Big dark red histogram, then it lightens off into green. Now these are the bear markets on the MACD. There's 2013-15, there's the 18-19, there's the 22-23. Here's a crossover of the average through the signal, still currently below the zero bound on the monthly time frame, expecting that to move into positive territory. Biggest green bar we've had on the monthly so far. Everything's looking good there. That was the end of the bear market in momentum. We are now into a bullish new phase. Right, RSI supports it. MACD supports it. So now let's have a quick look at the OBV. Let's bring this up on the weekly time frame. The downward trend in the OBV was broken and back tested during March. Since then we've moved sideways with the volume inside of a range which then broke to a new low. We're now back testing that range. This is the only indicator at the moment, although it's still setting higher lows, so it's still fundamentally bullish, and it did set higher highs here as well. We want to see this really start the ramp up, and it would be very reassuring to see a move back into and through this range higher, and for the volume, on balance volume, to continue to trend higher. I fully expect that to be the case going forward. Right then, let's bring up our moving averages. So, moving averages on the weekly time frame. Most bear markets come down towards the 250 in most long-term, most big bear markets tend to come down towards the 250 weekly exponential moving average in most markets, always dragging the 10 and the 20 through the 60 as they do it. Now, they don't always go all the way through it, they don't always make it to it, sometimes they hang around it, so on and so forth. But in this case, we broke through the 250, dragging the 10 and the 20 through the 60, just as we dragged the 10 and the 20 through the 60 here in the 2018 to 19, and in the smaller wave degree of COVID, we did it here, and we did it back here as well in 2015. We've now moved back above the 250 exponential moving average, dragging the 10 and the 20 through it, and the 10 and the 20 through the 60, and all pointing up with price above them. Fundamentally bullish now, that looks. So we've got our classical indicators telling us that we're bullish, we've got our count telling us that we're bullish, we've got every reason to be bullish. Okay. So now let's come in and have a look at things on a slightly smaller scale. We're going to bring up the fully detailed primary count now. And we're just going to make a few points. So, we broke the downward trend and backtested it here, as we can see. That's the bottom of our primary wave 2 in November last year. Since then we've been in a bull market. Right. We've done an intermediate wave 2 as a flat ABC. Now this is one of the only things which I believe is up for question at the moment. This intermediate wave 2 is significantly smaller than the intermediate wave 2 I labelled here, which was the COVID collapse, within a lesser wave degree, within the primary wave 1. So this is the intermediate for primary wave 3. In theory, if we are going with this idea that we're getting stretched out like an accordion, then maybe this was not the wave 2 at intermediate degree, maybe this was the minor wave 2. So that means a lot of updating for the smaller time frame, which I'm going to have to do. But in the meantime, I'm just going to change that on the chart, as I feel that might well be the case. So what that means is that we have 5 minor waves to come up. Okay, in minor degree. We will then get an intermediate 1. We will then get a deep intermediate 2. And then we will be off into intermediate 3, of primary 3, of cycle 3, of super cycle 3. So maybe one more big correction to come. Keep your fingers crossed, that would be wonderful. Because you can't, how can you dislike that opportunity? So that's what that we can keep our fingers crossed and hope that's the case, that we will get one more big bite of the cherry one more time. But there's a chance that we won't, and we're just into free all day now, and we're just off to the moon. Now if that's the case, so be it. I've been here for a long time, that would be gravy for me as well, but I always want more. So one more big correction down would be lovely, but we'll wait and see if that happens. So we've spoken at length now about the primary count, and the primary count has us going higher and higher and higher in the 3 of the 3 of the 3 of the 3, and it's going to take years. There will be corrections along the way, there will be significant drawdowns along the way, price never moves in a straight line, but if this count is correct, it's a great time to be here in Bitcoin. Now we've said all of that, so now let's look at a bearish idea, right, because we have to give the bears their due. Alright. Ignoring the lack of alternation, ignoring the lack of new price extremes, ignoring the not so great wave extensions and the other issues we have with the bearish count, let's just run with the idea that a cycle wave topped in November 2021 and we've only had the first move down. The only way I can now really make this work is as a W, X and Y. We've completed 5 into an A flat into a B, and we will have 5 waves higher in the C of an X before coming lower. Everything I've said about the previous bearish cases bar this slight update is still the same. So when I look at the golden ratio in log at 10.277.82, when I look at support levels around the same region, when I look at the target fibs off of one-to-one extensions, that will have to change, because what we need to do, we don't know where that C wave is in, or where it's going to be yet, right? Those targets will have to change. But the 89% retracement, which overlaps the 61.8% in the 10 grand region, that doesn't have to change. That will stay the same. The demand we have down here, that will stay the same. Okay, and the likelihood target for us to complete can all stay the same. So basically, even if we're still bearish, I still see us settling somewhere between 8 and 12 grand. We're just going to have to go higher first, and then lower again. So the bearish count is not impossible. The bearish count could still occur, but I firmly believe that the bullish case is now more likely. Right, but we must always have a bearish count in place just in case. So I feel that if we are going to go lower, we have to still go higher for a while first. I don't think we can be done yet. I think we've got to go higher for a while, and then we're going to come down and make new lows. but that is not the primary count. The primary count is bullish. I think we've done 1 and 2 at minor degree, 3, 4, 5 to come at minor degree, then intermediate 1 will be complete, into intermediate 2, which will be the deep correction. That will be the most likely bear trap to drag people in short, thinking that we're going to new lows, only to find out later that we were not. It will also be, as tops always are, a bull trap, because people come in, leverage long, they get hyped up because they're stupid, and I've been stupid, and you've been stupid, and we've all been stupid, and we've all done that as part of our learning process of being traders. I've been there, done that over the last couple of decades, alright? So don't take it personally, but it is fucking stupid, and it's just part of learning the trade. Okay? But that will happen again, because people always buy the tops. And that provides liquidity, just as the people who go short at the bottom provide liquidity to the opposite direction. This is just the way it works. So if that's the case, we get 1, 2, 3, 4, 5, we'll get a 1, we'll come back in a 2 again, and then we're into the 3 at intermediate degree, of primary degree, of cycle degree, blah 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 blah, reiterating the same thing over and over and over and over again. I think I'm going to have to leave it there, guys. That's the long-term view of Bitcoin. We're in a bull market. We have been since November last year. Ethereum's likely been in one since June last year, and there's no reason to think of to the contrary in the meantime. Now, if things suddenly U-turn and violently break down, we can come back and we've got the bearish plan and the bearish idea as a backup. So I'm going to leave you there, guys. We will do a shorter term update on Bitcoin next opportunity I get to do a YouTube video, but I just wanted to introduce the long term count and remind people of what I see is going on in the longer term, and why I feel that the structure, the form, the correction, the depths and the scaling of everything, combined with the classical analysis of our indicators, all of it points towards this count being the correct one. Not this one, this is bearish, sorry. This one being the correct one. So I'm bullish, and yeah, looking forward to this run higher. So take care of yourselves, guys. I'll be back with you as soon as I can. All the best. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you're interested in learning how to do Elliott Wave, you can join the Patreon, and you can get access to the weekly live streams, and you can also go through the entire Elliott Wave series and learn how to do all of this stuff for yourself. Right, take care of yourselves, and I'll be back with you as soon as I can. All the best. Bye bye.